Let's pull back the curtain on a reality shaping today's crypto markets. Behind the price charts, there's an invisible wall of bots. Big hedge funds, small coders are feeding automated programs with streams of real-time data, tweets breaking global news, Reddit posts, and then sudden movements of the so-called whale wallets. These bots are programmed to react faster than humans could ever dream of, placing thousands of micro trades every single minute. The logic is simple but incredibly powerful. Sniff out the trends before the masses react. Jump in early and skim profits from the chaos. But here's where it gets wild. When enough bots begin chasing the same signal, the market can suddenly lurch in dramatic directions. A slow rise turns into a vertical breakout, or a dip becomes a waterfall crash. And it can all happen in a blink of the eye. We've already seen proof of this in action. Not long ago, an AI-driven trading system misread the fake news headline about major exchange hacks. Within seconds, billions of dollars evaporated as the bots triggered a cascade of sell orders. Retail traders were left startled at red screens, unable to react before the opportunity was gone. That's the double-edged sword of these automated strategies. On the positive side, bots pumping liquidity into the system. That means when you want to buy or sell coins, there's almost always somebody on the other end of the trade. The constant hum of high-frequency trades tighten spreads and makes the crypto market run smoother than otherwise might. But the downside is every bit as dramatic. Flash crashes triggered by algorithm missteps and can wipe out stop loss orders in seconds. Regular investors who trust those safeguards to protect their capital end up selling at the worst possible moment, right into the algorithm's hunger. Once the volatility settles, the bots that cause the crash often end up scooping those assets right back at the bargain prices, while human traders are left licking their wounds. So what can the everyday investor take from this? First, understand the landscape. The market isn't just humans trading coins back and forth anymore. It is a living battleground of sophisticated AI systems competing. That doesn't mean you can't succeed, but it does mean being hyper aware of how quickly things can change. Second, manage risk wisely. Wider stop loss spacing, stable coin hedging, and long-term conviction play bigger roles now than ever. Finally, remember the volatility cuts both ways. Bots don't just create chaos, they also generate opportunities.